Hey everybody, welcome to our VectorVest YouTube channel where we do the work, you reap the rewards. So as I'm looking at all of the videos that we've put out most recently, pertaining to what's going on in the market, we talked about recession-proof stocks to grow your portfolio, identifying your exits. Do this now, protecting and preparing your portfolio. Folks, we've been all over trying to help you go through the time that we're going through right now and preparing you and helping you to make money in the market. And this video is going to do the same thing. Today, we're going to talk about contrarian exchange traded funds, or Contra ETFs. Not only am I going to talk about them, I'm going to show you how to invest in them depending on how you invest in the market. And this is going to be a part one of part two, because our next video on this, I'm going to show you the easy button to help you to do and find these ETFs. So if you're ready, you sit right there. All right, everybody, Glenn Tompkins, Senior Instructor here at VectorVest. Always glad to have you here, always glad to be here. And I love putting out videos to help our YouTube subscribers make money in the market, no matter what the market is doing, whether it's going up, whether it's going down, whether it's going sideways. We can always help you to take advantage of current market's conditions. All right, with this, I'm going to jump straight into the program. All right. This is what's going on in the market, folks. The Fed came out last Thursday and said that they're going to aggressively go after the market, or go after inflation, and they're going to do it until the job gets done, even if it causes the economy some pain. Now, this is interesting right there, because people say the truth hurts, but I also knew that the truth will set you free. So from that perspective, the market is just going down. You see there's a lot of red in our color guard all the way across the board. Today, we're looking at a lot more stocks going down than going up. And let's go over to the graph. Here's the market timing graph. Remember, folks, when we time the market, we're looking at the average move of over 9,000 stocks, over 9,000 stocks. And what you're looking at here is a 3-month look of that VectorVest composite and what's going on in the market. Notice right here, prior to the Fed stating what they were going to do, this big down day here, right? Prior to that, we had our subscribers prepared. We had a high here, and we had an indicator called the MTI, or market timing indicator, which told us that the market was looking for a top, and right after that, the market did pull back. Now, you'll notice there's a level of support that I have on the VectorVest composite that I was keeping my eyes on, and we fell through that on 8/19 of 2022. Not only that, our fastest market timing indicator, the primary wave, gave us a down call. Folks, that was the onset of what we're going through right now. Let me move over of what we're going through right now. And the market is just still precipitously going down. But again, I am going to back up and say that we had our subscribers already prepared, looking for a market top prior to all of this happening. All right. So with that being said, I'm going to use that date right there of 8/19/2022, when we got an initial fast call to start to think about playing the market to the downside. Now, when we talk about contrarian exchange traded funds, contrarian because they work opposite of the market. Contrarian ETFs, or exchange traded funds, go up in value when the market goes down in value. Why is that so important? Because there's a lot of people out there that when the market goes down, they sit and sell out of all their positions and just sit on the sideline. And folks, you're missing a great opportunity to make money in the market. Now, why is that? Because stocks go down, or markets go down, stocks go down faster than they go up. And partaking of a downtrending market is a great way to still grow your portfolio. And I'm going to show you the least riskiest ways to do so with Contra ETFs, depending on how you invest in the market. So I'm going to use that date of 8/19/2022, and I'm going to start off with our Unisearch tool. The Unisearch tool has a lot of searches for our VectorVest subscribers to help them to locate and hone in on types of searches or scans to help them to find the right stocks at any given time. And we've got a folder here that says ETFs, and we're going to spend our time in that folder. So in that folder, I'm going to click, and there's a lot of different bullish and bearish ETF strategies in this folder. Now, anytime we're bearish, we're going to talk about Contra ETFs. And when we're bullish, we're going to just talk about regular ETFs. You can play the ETFs, the exchange traded funds, whether to the upside or to the downside. And actually, there's a lot of people out there that trade just ETFs, bullish in the bullish market and bearish on the other side in the bearish market. So that's a good way to make money overall as well. But I'm going to hone in right now on some specific Contra ETFs that you need to pay attention to. Now, one of the best ones that are in here is called buying Contra ETFs. You'll notice that there's some parameters set for it. Biggest thing, you've got to be looking at the industry group of ETF shorts. We have that already set up in the system for you. We want these ETFs to be greater than $1 and have average volume of 100,000 shares. That makes sure we're not buying penny stocks or penny ETFs, and they have liquidity by having an average volume of over 100,000 shares. The stock exchange and stock watch lists, I'll talk about that at a different time, but it excludes a lot of things that we don't want to show up in this list. And it's sorted by our master indicator, VST ascending. I like this search because it helps us to sort of bottom fish contrarian exchange traded funds or Contra ETFs when the time is right. So we saw when the market started to turn down. I've set this up to 8/19, that date where the market started to turn down. We got our first initial fast signal saying that it was okay to play the market to the downside. I'm going to run this search. I'm going to show you the top 5 stocks. Here we go. LABD, which looks at the biotech, playing it to the downside. FANG, tech stocks, playing them to the downside. Oil to the downside. The Dow Jones Web and the Dow Jones 3 times to the downside, and high beta stocks to the downside. Now, the beautiful thing about this, playing this to the downside, you buy these long. You do not short them. So now you don't have to have a margin account. So you're not borrowing any money from your broker. And it's a better way, especially if you're comfortable buying long, to still be in the market and play these long or buy these long, even though the market is moving down. Now, I'm going to show you something. Here's the top 5 of that list from that search. I'm going to do a quick test from that date up until right now. Wow, look at that, folks. 11.6% in 7 trading days. That, my friends, is amazing. And that's the power of Contra ETFs. Now, I do want to point out something. A lot of these are triple leverage Contra ETFs, and we're going to get into that in a second. All right. And then we have another search in here, worst performing Contras. All right. Now, this is a momentum play on Contra ETFs because these are sorted by relative timing times comfort index, stocks that have price growth persistence and are in an uptrend. All right, same kind of scenarios are set up. Here's the top 5. Let's quick test them. Wow, 8.98%. Both of those Contras searches are doing well in the last 7 trading days as the market overall is going down. That's an easy way to make money. And look at the market. The S&P 500 is down almost 6%, but we're up almost 9%. And in the other one, we were up almost or over 11%. Wow, that's what you want to have going on in your portfolio. All right, now I'm going to take a quick pivot. This is looking at a search, but now I'm going to show you how to dive in on specific types of Contras based upon how you invest in the market. Now I'm going to go over to the Viewers tab at the top, and from here, we have another folder called ETFs. As I open this up, you'll notice that we do the work, you reap the rewards. We've got ETFs, whether bullish or bearish, segmented in a lot of different ways for you to take advantage of them at the bullish or the bearish times. So I'm going to start off, especially if you're brand new to Contra ETFs, I'm going to talk to you about non-leverage Contra ETFs. Let's scroll down. Non-leverage Contra ETFs, which means whatever you're looking at, whether it's gold, whether it's the Dow, whether it's the S&P, or whatever indice or index you're looking at, if that index in a downtrending market goes down 1%, these Contras only go up 1%. It's 1-to-1. It's a safer play to still make money in the stock market without putting a lot of risk on the table. And this is especially great for the brand new people entering into the world of Contra ETFs. All right, here's the top 5. Now, it's interesting. I need you to see this as well. When I'm looking at a watch list of stocks, there's no parameters. There's no price. There's no volume. There's nothing like that. So when I'm looking at a watch list of stocks as I am right now, the first thing I want to do is go over to the column that says average volume, click on that. Sort this list by average volume to bring the most liquid Contra ETFs to the top of the list. All right, now look at the stocks. There's the S&P, there's the Qs, the Russell, the 20-year note, and so on and so forth. Now, these are non-leveraged Contra ETFs. Let's quick test them over the last 7 trading days. Look at that, 4.31%. Every one made money. Again, these are ideal for the people who are brand new to Contra ETFs and want to make money in a downtrending market with a lot less risk. Again, the spiders are down almost 6%. This is pushing 4.5% up. And folks, this is a great time to take advantage of it, especially since the market's going down. All right, let's say you're a little bit more aggressive. And now let's go to the 2-time leverage Contra ETFs. So what that means for whatever underlying you're looking at, when it goes down 1%, the 2-time leverage goes up 2%. Wow, I'm making more money. But wait a minute. As quickly as you can make that money is as quickly as you can lose that money, because if that underlying goes up 1%, your 2-time leverage Contra goes down 2%. Keep that in mind. But nonetheless, first thing I want to do, because this is a watch list, is I want to go over the average volume, sort by average volume. Remember, if I'm looking at a search, the criteria is already there. So I'm sorting to make sure I got the most liquid. Here they are. Let's quick test them. Now, these are 2-time leverage, right? Wow. Almost twice of what we made on the non-leverage. 6.62% in 7 trading days. One of these did not make money. It was actually down 5.82%, but the other ones grossly overplayed that down 6.62% while the market was down still 5.5%. Now, how about those are super aggressive? All right, you want to now really rock and roll in a downtrending market. Let's go look at the 3-time leverage Contras. Now, these are the super aggressive. If you're brand new to Contras, I am going to try to tell you, you don't want to play these. These are for the people who are trading in a downtrending market. They can make a lot of money, but now the underlying goes up 1%. These go down 3%. Whew. Man, that's a lot to take on as far as a risk. Thus the reason why I started out with the least riskiest and now getting to the most riskiest. Let's do a quick test still from 819, because that's where we got our first primary wave down in this most recent pullback in the market. Let's quick test them. Now you're going to find this, wow-wee, 20% in 7 days, and every single one of them made money. Now, let me stop you again. That looks great on paper. That looks great on paper. But these are trading vehicles, not more so investing vehicles. I needed to show this to impress upon you your ability to make money in a downtrending market. But depending on what your risk tolerance is, you need to pick the right ones for you. So folks, Contra ETFs are a great way to make money in the market, in a downtrending market, without having a margin account, without having to short stocks. Those of you who are brand new, concentrate on the non-leverage. For those of you who just want to use the search and go and roll with it, by all means do so. But depending on how aggressive you are, folks, we have the tools for you to find the right set of contrarian exchange-traded funds to help you to make money in this current market's trend. And remember, there's going to be a follow-up visit, because I'm going to take this same methodology and I'm going to incorporate an easy button for you to be able to find these at the drop of a dime. One quick note about this video: never buy a Contra ETF, whether it's leveraged or non-leveraged, on an up day. Always make sure that you're buying into a Contra ETF on a day that the market is going down. All right, so when I do my next video, I'm going to talk about how to get out, but I'm also going to show you the easy button as well. Folks, this video is over, and until the next time, see ya.